It's quite a muted action in the equities market, but a lot of action when it comes to the currencies as well as the commodity space. Look at the move that we are seeing in the sugar prices. Domestic sugar prices are sitting at a six-year high. Other than that, we have been talking about metals, but most importantly, have a look at the crude oil prices, because Brent crude oil prices have hit a 10-month high, surging to the $90 per barrel mark, and now rising crude prices have a broad-based impact on the Indian economy. And to decode all of this, we are being joined in the studio by my colleague Soumeet Sarkar. So Soumeet, crude oil prices, major implications on the global economy as well as in the Indian economy. Why are we seeing the surge, as well as what could be the after effects?
The why part is because Saudi and Russia have actually went ahead and they have said that they'll keep the cuts that they had announced earlier till December 2023. Now, Saudi will be extending their voluntary cut of around 1 million barrels per day, while Russia will be extending their voluntary cuts of around 0.3 million barrels per day till December 2023. And they also said that they will review this cut that they have extended every month. So this will be important to track whether they continue with the cuts ahead or not, because that's how, and that's what will decide the trajectory of crude oil prices going forward. Now, what will be the impact on India? Firstly, why the impact on India? Because India imports nearly 80% of its crude requirement, and every $10 per barrel rise in average crude oil prices inflates the current account deficit by around 14 to 15 billion US dollars. That is nearly 0.4% of the GDP. And when it comes to inflation, every $10 per barrel rise in crude oil prices inflates the inflation by around 50 to 60 basis points as the retail inflation, and the wholesale inflation increases by around 125 to 135 basis points. So it has a broader impact on the Indian economy, because crude oil, nearly 80% of the crude is imported in India.
Absolutely, and add to that also you have the rupee weakening, so that will definitely put the pressure on our balance of payment. But this is why the crude is rising, what impact it has on the macros. But let's talk about individual stocks. We all know when you talk about crude, the first thing that comes to your mind is definitely the OMCs or the oil and gas company. But it's not only limited to that, right? Because you have a lot of companies that use crude as a raw material.
Well, yes, definitely right, Cheryl. Firstly, on the oil marketing companies, because they will be getting impacted the most, because they are the ones who are selling the crude, refined crude to, in fact, all the consumers. And the reason why they will be impacted is because crude is their raw material, and that prices have been increasing, but the prices of retail fuel, that is petrol and diesel, have remained largely stable, in fact unchanged for a very long period of time. And given the fact that now crude oil prices are at $90 per barrel, the gross marketing margin that oil marketing companies earn on selling every liter of petrol and diesel, that has come down sharply. In fact, on petrol, the margins have come down to around 5.5 rupees per litre from 13.7 that we had seen in the June ended quarter. And for diesel, in fact, it has turned negative 5.7 rupees per litre from positive 9.1 rupees that we had seen in the June ended quarter. Now, when it comes to oil explorers like ONGC, HOEC, Oil India and Vedanta, for them generally a rise in crude oil prices should be beneficial, but given the fact that government has introduced windfall taxes on crude production, their gains on rising crude oil prices have actually been capped. So this rise in crude oil prices would largely be neutral for these companies. Now, there are a host of other companies that use crude as their raw material. Like there is paint, which has nearly 40% of their raw material cost derived from crude. Then there is aviation, where crude oil prices or ATF prices form nearly 40% of the total expense. Lubricant manufacturers, nearly 50% of their RM cost is crude related. Then there is tires, cement, also which have nearly 40 to 50% of their cost either directly or indirectly related to crude. And then there are a host of specialty chemical companies like Balaji Amines, Alkyl Amines, Camlin Fine, Clean Science, Rosari Biotech, Nossel, Aarti Industries, Atul, Vinati. These companies also have nearly 40 to 50% of their raw material prices related to crude, and a rise in crude oil prices, at least with a lag effect, will definitely impact the raw material basket prices going forward.
Okay, Soumeet, thank you so much for highlighting all those details, why the crude oil prices are rising, as well as what could be the stock-specific action. But with this, viewers, let's move on and let's get the expert take on the back of this news flow, not just the crude oil prices, the kind of surge that we are seeing in the commodity basket. Let's understand that which stocks could be in focus and what will be your strategy on the same. And for that, let me welcome on board two of our very special guests, Sharmila Joshi on the fundamental side, and also on the technical side, we are being joined by Kunal Bothra. Very good morning to both of you. And Kunal, let me come to you first, because Soumeet just highlighted the rise in the crude oil prices and the stocks stocks that will be in focus. And we have been talking with you regarding the sugar prices as well as the metal pack. So you have a basket full of stocks. So amongst that, any particular stock that is on your radar, and specifically on the crude related stocks that are in focus, the OMCs majorly, because we are seeing weakness in those counters in today's trading session. So what should be one strategy in the same?
Good morning, everyone. I think partly yes, because many of the OMC stocks, I think in the last one and a half odd month, has already started to go into a corrective phase. So we look at the recent tops for the likes of IOC, BPCL, HPCL, and these stocks have corrected somewhere in the tune of 7% to 10% broadly in the last 1 month. This moves in sync with how the crude oil prices have behaved in the last one and a half odd month, where you've seen a gradual rise, pick up of price action for crude oil prices. It's given a golden crossover on the daily charts, I think 3 days or 4 days back, 4 trading sessions back for crude oil prices. So that's also another important technical parameter to take note of. But then the impact, is of course being reflected into the OMC names. Even the paint stocks, I think gradually would probably get into a correction, the likes of Asian Paints, Perched, etc. So sugar, my sense is that many of the sugar stocks are actually breaking out, and these stocks could be up for a decent upside. But for the paints as well as for the OMCs, I would be a lot more cautious.
On the paints and the OMCs, but sugar stocks may see some upside. That's the take coming in from Kunal. Very good morning to you, Kunal. Good morning to you as well, Sharmila. And what's your take coming in? It's a huge basket of stocks that we are discussing. Yes, crude, sugar, and also what's happening with the rupee. But given the fact that it's a diverse sector that we're talking about, what's your take? What is the single thread that ties all of these commodity-linked stocks together? And what will be your take on what should an investor do? Should they look at these sectors right now?
Is that for me?
Yes, for you, Sharmila.
Yeah, I briefly lost connection. So anyway, I think that coming to rise in crude prices, I think more than the immediate rise that we see, I think the commentary that you got along with it, that this will be reviewed. So there is a possibility that we could be in this for a longer haul. So you need to see how really how crude prices behave over the medium term, because I think that it's not a single stock or a single sector. I think when you are talking, especially in the Indian context, as you all were discussing, I think it's negative for the economy as a whole, because it will definitely put a spanner in the works as far as that whole inflation bit, as well as where interest rates are, etc. And not just for us, I think even globally. So let's see how this thing proceeds. But I would then therefore be a little circumspect on markets as a whole. In fact, and we've seen that run up. So I think the obvious sectors are what will have. I wouldn't consider oil marketing companies at all, because the windfall tax gain sort of negates any benefit that could come to oil companies. But the obvious are paint companies, then companies like Pidilite. I think going forward, consumer good companies, FMCGs. Anyway, we are seeing a slow uptake because of concerns in the rural market. So I think it will sort of slow you down in terms of the enthusiasm with investors approach a lot of the mid-cap stocks.
So Sharmila and Kunal both I know that Kunal did speak about the sugar stocks. We've also seen what's happening with the sugar prices. Globally, it's at an 11-year high. Domestically, sugar prices at a 6-year high. Kunal is of the view that he will see some more run-up in the sugar stocks. What's your take, Sharmila? And also, Kunal, it's good that you have sugar. You have your coffee without sugar, isn't it?
I think I left that coffee without sugar long back. I'm back to sugar now.
What about you, Sharmila? Do you think that you should avoid actually, at least with these sugar counters in your portfolio, or you should actually have a pinch of sugar every day?
I have a very sort of a neutral to negative stand on a lot of these soft commodities, especially things like sugar, because we are big consumers of sugar as a nation. And it is, then when, as now we are getting into festival season, and if sugar prices go up, then, there will be sort of political control on that. So, it's very difficult to take a call on the stocks, therefore, because you could say that, oh, international prices are up, so sugar companies will be able to export, etc. But then you will find that the government cuts back on what you can export, etc. So it definitely follows a cycle, and if you get it at the lower end of the cycle, sugar stock, sure, you can think of buying. But by and large, I would really avoid this.
All right. Avoid the space is what Sharmila has to say, and not a pinch of sugar. It should be spoonful of sugar. But Shashi, given the fact that everybody is now avoiding sugar, so it will be pinch of sugar only, isn't it?
Could be, Cheryl, and feels like it's time to control that sweet tooth cravings. So let's see how much we can do that. But with this, viewers, it's time to slip into a short break.